everyone, and welcome to this edition of Buy Now, Sell Now Weekend. It's been an interesting week for the equity markets. We've kickstarted the earnings season, but this show is all about you, and we'll be focusing on all your stock queries. I'm Avan Dabash. But so here's what's lined up. We'll be getting in some viewer queries today on Jagjit Industries, also discuss ICICI Bank and what you should do with that stock. Not just that, we have our portfolio advisor segment. So today we will be discussing Jose George's portfolio on the show. Time to introduce our experts. Ashish Maheshwari, Director, Blue Ocean Strategic Advisors, is here to help us out on the fundamentals and on the technical charts. We've got Manas Jaiswal of Manas Jaiswal Technical Research. Welcome to the show, gentlemen. Start off then with our first query for the day, and this one comes in from Kishan Thakur, and he's got a query on Jagjit Industries. Mr. Thakur, what's your question?
I own 3,000 shares of a company called Jagatjit Industries. Jagatjit Industries is in manufacturing of liquor, including popular brands like old-time brand called Aristocrat Whiskey. The company was doing quite well till senior Mr. Jaiswal was alive. After his death, there were disputes in the family and the company suffered. I hear nowadays that granddaughters taken over the company and they seem to be wanting to revive the company. I would like to know the following things. One is, how capable is the granddaughter and whether she will be able to turn around the company. The other I would like to know is that whether the company can be a takeover candidate, and accordingly what will be the prospects of the company, whether should I hold, sell, or what should I do. For your information, I am a long-term investor. In fact, I have had these shares for last nearly 30 years.
Okay, clearly our investor here has done a lot of homework on his investment in Jagjit Industries, and now it's a question that's more pertaining to the fundamentals. The company, from what we know about it, has been in focus. There has been a massive restructuring as well, which has taken place. The company is talking about how they are confident of a complete turnaround in 2016-17, talking about how the sales of Aristocrat Whiskey, despite the fact that they've plunged to an all-time low, there is prospects for growth going forward. We also understood, according to some news reports, that KKR may be backing Jagjit Industries' revival plans, and that would certainly be a big shot in the arm. Those are the encouraging charts over the long term, but let's get in a view then, Ashish. Talking about some managerial changes, what the outlook is. You studied the company carefully. Can you help Mr. Thakur out?
Yes. If you see company's fundamental, company is reporting losses for almost last 4-5 quarters, and there's a big losses. Besides this, they are having debt of almost 280 crores, which is again big looking at the size of the company. And in anticipation that post new generation taking over, stock has already rallied from almost 32 rupees to almost 84 rupees, and stock is very liquid also. Now the key challenges is, if KKR even comes in the company, they will come with a certain IRR based formula, which will be again higher than what they are paying currently to the banks. So these kind of things are good for the short term, but in long run, I don't know how much this is going to support. Besides this company is again going to face stiff competition from new entrants in this particular industry. And again, industry is facing problem. Bihar become dry. Tamil Nadu again, there's liquor prohibition coming in post new government, etc. So in my view, not very encouraging and challenging times are there in this industry. Even if you see stocks like United Spirit, from 4,000 rupees stock, it came down to almost 2,200 rupees. So in case like if you like this industry, instead of Jagatjit Industries, I'll go with Radico Khaitan. This is very stable company. Company is making decent profit. Every quarter company is coming out with a certain growth. And this year I am expecting a EPS of almost 6 rupees in Radico Khaitan. So stock is still available less than price earning a multiple of 15, which is much better than what Jagatjit is quoting. And as far as this new management is concerned, only time can tell how much they can revive the company. But in my view, as you're a senior investor, better to stay with a set and established company where on every quarter to quarter you are going to get good numbers. At the same time, you can expect dividends, which is not the case with Jagatjit Industries. That is why I advise you exit from this stock and better shift to Radico Khetan in case you want to stick in the same industry.
I hope you've taken note of that advice on the fundamental side. Ashish already, gave us more insight into the company, into the financial performance. It's not been very encouraging of late. Radico Khaitan is a company that operates in the same space, and he believes it's a thumbs up. You can look to put your money into this counter instead. Let's get in a view then, Manas, purely from a technical perspective. On account of the way the stock has performed, it has been a pretty strong rally that we've seen on the long-term charts. Are you convinced at all that this is a stock that one should keep in the portfolio?
Last year in the month of June, the stock made a base near to 33, and thereafter it is continuously making higher tops and higher bottoms. For last 3 to 4 months, it was facing some resistance near to 70 rupees. But finally, in this month, it broke that resistance and it gave a flag breakout on the daily chart. Now, the target of this flag breakout comes near to 100. So the short-term trend is definitely positive. It is a low volume stock, so that is a concern. But overall, if you're talking about pattern, the short-term target comes near to 100. But if you're talking about little bit long-term, say around 12 to 15 months, then possibly stock can again test its 2010 high of 130. So that would be the target for long terms around 12 to 15 months.
Okay, that's the call coming in. You can look to hold on. So that's an option that you can look to undertake as well on your investment in Jagjit Industries. In fact, Manas also outlined some important levels to map out on the stock. So the take is entirely yours. I hope you've taken note of all the advice that we've given. Let's move right on to our second email query for the day, which comes in from Rajiv Sharma, and this is on ICICI Bank. Now, he's bought 200 shares of ICICI Bank, purchased at a price point of about 22.60 per share. And he wants to know what he should do. It's a fairly long-term time horizon of the next 2 years. Let's just discuss the stock, which has been in the news of late with respect to some brokerage calls that have come in. Credit Suisse recently just upgraded the stock to outperform from a neutral stance. They've upped the target price as well to about 295 rupees from 258, talking about how the derating to one-to-one time book reflects a stress on the loan book and that the fourth quarter should see another spike in NPA slippages. Although Credit Suisse is pretty confident that the improving NPA recognition will be a key for re-rating of the stock, and the core bank's return to equity could be a modest 13 to 14% in FY17 to 18. Let's talk about the fundamental prospects and how one should exactly be, viewing the investment in ICICI Bank. Currently trading at about 25.50 levels, Ashish. It is poised for strong growth in the fourth quarter. What's your sense as to what he should do with this investment?
I think investors bought this stock at 226 and the stock is already at 250. And my advice will be to hold on this stock. I'm expecting even it can touch 300 in this rally. Now, 2-3 positive things which has happened in the stock. First of all, the results which came so far from private sector banking stocks like HDFC, DCB, they are all quite encouraging. It shows that everything is not lost in even private sector banking stocks. And this stock has came down from 340 odd levels to almost 180. And after that, now it is consolidating. At the same time, now there is revival in entire metal pack, and where their exposure is there into steel and other industry. Once this industry turn around, then whatever the provisioning is done, this will be right back. And now crude is also strengthening, so you may see that those textile companies will also do well over a period of time. So whatever fear related to provisionings are there or higher NPAs are there, these are not going to be there in Q4 and going forward also, which is again positive for ICICI Bank. And in my view, a lot of traction is coming in Axis Bank and Yes Bank. So ICICI Bank will also try to catch hold of those price rises. Besides this, RBI is now also proactively helping banks to change the norms of their provisioning. like one recent norms came where almost 130, 140 projects, they de-recognize that these are going to be NPA, which is again the short-term arm for these private sector banks also. So in my view, worst is getting now over for banks like ICICI, and you will see going forward good rally coming in. So my advice will be to remain invested with a price target of 300.
Okay, there you have it. It looks like the new RBI norms as well as future prospects for ICICI Bank look pretty robust, and it's a whole recommendation. Ashish is talking about a target price of 300 rupees. Manas, let's chat technicals. Do the technicals mirror the fundamentals? Is the stock poised for some sort of a strong breakout on the upside? Do you think the game changer could be perhaps when the company delivers its earnings as well?
See, from the level of 390, stock was making lower tops and lower bottoms. And 2 months back, stock made a low of 180. But thereafter, it started making higher tops and higher bottoms on the daily chart. A few days back, stock broke its 100-day moving average. Yesterday, it broke its 200-day moving average also. And on the daily chart, it has made an inverse head and shoulder pattern, and stock is trading above the neckline. So if you're talking about short term, I think stock can test 300, and it can test 300 in next 2 to 3 months time. But if you're talking about a little bit long term, say around 8 to 10 months time, then I think stock has potential to test 340, 350. So I think he can hold the stock at current levels and keep a stop loss below 220.
Okay, that's the advice coming in on some levels to map out on the technical charts. Manas Jaiswal is saying that hold on to the stock at the current levels. So clearly, it's a consensus call from the fundamental as well as the technical side on the stock. Quick break right here on the show. Stay with us. On the other side, Jose George's portfolio. That's what we'll be discussing when we return. Welcome back. This is Buy Now, Sell Now Weekend. Let's take up our viewer query on the portfolio side now and introduce Jose George's portfolio and profile for you. He's 45 years old. He's an auditor by profession, has a long-term time horizon. So let's get straight to the stocks that he owns. First up, Axis Bank at 428. He's purchased 50 stocks. He's got Cadila, 50 shares at 334 rupees. Moving on, there's Coal India in the portfolio, 50 shares bought at 288 bucks. Hindustan Zinc, 160.5 is where he's purchased 50 shares. Diwan Housing features on the list at 198 rupees. He's got close to 50 shares. Moving on to large caps, then there's Maruti as well, 10 shares at 3,425 bucks. Marico features on the list, 50 shares at 243 rupees. There's Reliance Industrial Infra. He's got 25 shares bought at a level of 416. Tech Mahindra, 463 is where he's picked up close to 50 shares. Let's get in a view then, Ashish, as to what exactly you make of the portfolio so far. There are quite a few marquee names in there. Start off with the first three stocks. He's got Axis Bank, Cadila Healthcare, as well as Coal India. What would you be advising?
Yes, quite a good portfolio, and though quantities is small in this stock, but still the quality of stocks is pretty good. As far as first three stocks are concerned, again, Axis Bank, I am bullish. Stock is also performing, and as private sector banking stocks are doing good. So Axis minded is going to lead this private sector banking bull run. So Axis investor can continue to hold. As far as Cadila is concerned, again, this is a good stock. Stock is rebounding from lows, and in pharmaceutical sector as such, not too much action is there, but still this stock has rebound from lows and already up by 50-60 rupees. And as their new cancer drug is launched in US, again, this is also going to do well. As far as Coal India is concerned, this is a stock which has underperformed. If you see last 1 month, 3 months, 6 months performance. So in my view, if you want to remain in PSU pack, better to look at a stock like GMDC, which is performing much better now. The stock has already appreciated quite a bit from 52-week low, and going forward also I'm expecting good upside because they are into the business of lignite, bauxite, etc. And now mineral prices and metal prices are firming up, so this stock will also continue to do well. And there's a mind it is again a debt-free company, so my suggestion will be to exit Coal India because not too much returns are expected in short to medium run. Instead, GFDC will be a better bet.
Okay, that's the word of advice coming in. For the first two stocks, stay put. They're good investments to have in your portfolio. GMDC, though, is a preferred bet instead of Coal India. Let's move right on then, discuss the next three stocks. Hindustan Zinc, are you comfortable with the stock at these current levels? Is there potential for Diwan Housing? And Maruti, what's the word? Because he's making good money here.
Yeah, Hindustan Zinc, I think it's time to book profit. Their numbers has also come, and market is not too excited looking at the numbers. And this is the reason I've selected instead of Hindustan Zinc, better to bet on Tata Steel because I'm expecting very good set of numbers from Tata Steel in this quarter as well as in coming quarter. And whatever developments happening in UK side, these are all quite positive development for Tata Steel. As far as Hindustan Zinc is concerned, now there's no trigger left and the stock has already appreciated quite a bit. So my advice will be to exit from Hindustan Zinc and move to Tata Steel.
What about the other two stocks?
Yeah, which one?
Diwan Housing and Maruti. What's the word?
Okay. Yeah, Diwan Housing is again a company which is doing well because all housing finance companies have started performing well. The stock has also seen a good journey from almost 140 level it has touched, and this has come to a good level at 200 plus. And looking at the size of operation now, DHFL has achieved. I'm expecting that this company is again going to do good in coming few quarters. So my advice will be to remain invested in DHFL. As far as Maruti is concerned, again this stock has corrected quite a bit from 4,600 to almost 3,400, and now again stock is showing a lot of strength. Besides this, their new launches are also doing pretty good. So in my view, Maruti is a stock where you can remain invested, and I expect again this stock can touch 4,000 and plus going forward. So my advice will be to remain invested in these two.
Okay, that's a swap and change to be made with Tata Steel, but nonetheless, the other two stocks are good names and marquee names to hold in your portfolio. Let's get in a call then, Ashish, on Marico. What do you think he should do with this name? Reliance Industrial Infra, is it a good stock to bet on? And Tech Mahindra, how does this stack up versus some of the other IT peers?
Marico is again blue chip FMCG company, and this is the only company in FMCG back which is quoting at 52-week high. In fact, last if you see 1 month, 3 months, this has performed very well. So in my view, you can remain invested because now good monsoon expectation is there. And Marico is the only company which is still showing decent growth, and not that much threat is there from as far as Patanjali is concerned. So in my view, Marico is a stock which should be part of your FMCG, which should be part of your portfolio as a FMCG play. As far as Reliance Industrial Infrastructure is concerned, I'm not too upbeat on the prospect of this stock because if you see the business model of the company, they are doing transportation of petroleum product and water. They are giving on rental construction machinery, which are again very niche kind of model, but working in 2-3 geographies only and mostly to acting as an ancillary to Reliance Industries. Instead of this, in my view, you can shift to Reliance Infrastructure Limited, which has delivered very good return in last quarter, and from lows of almost 300 rupees, stock has come down to 550 rupees. So I am expecting Reliance Infrastructure will lead the rally in infrastructure pack, and you may even get 700 mark there. So my advice will be to remain invested. As far as Tech Mahindra is concerned, for last almost 6 months, this stock has also not delivered because of last 2 quarters were not that great. But now stock is again consolidating. Stock already up by 50-60 odd rupees from 52-week lows. And going forward also, I'm expecting as IT sector is doing good, this stock will have a potential to give you 50 to 60 rupees more from here. So my advice will be to remain in Tech Mahindra invested.
Okay, that's the call coming in on the entire portfolio. Let's just walk you through the recommendations made by Ashish. Axis Bank is a keeper. Hold on to that one for a target of 500. Stay put in Cadila with a level of about 400 on the upside. Make a switch. Coal India is an exit. GMDC instead is a good stock to buy, particularly in light of the way iron ore prices have been faring. Buy that with a target of 100 rupees. Tata Steel, that's a preferred option in comparison to Hindustan Zinc, so put your money in there for a target price of 400 rupees. Stay invested in Diwan Housing for a target of 240, and Maruti Suzuki is in top gear, so hold on for targets of 4,000. Marico is the other one. Stay invested here for a target price of 300 rupees. Hold on to RIIL for targets of 700, and look to, in fact, buy more as well. And Tech Mahindra is a final stock. It's a keeper. Target price 550. Let's just run our viewers through a disclaimer that if you'll be taking any advice, you must remember that this is only a model portfolio. Please consult your individual investment advisor. Quick break right here on the show. Do come right back. We'll be discussing top stock ideas. Back with Buy Now Sell Now weekend. It's been an interesting week on the frontline indices. Although we were eyeing that mark of 8,000, it didn't quite happen. Okay, Ashish, let's get in some wealth creation ideas. Talk about what your view is in terms of individual stocks. What would you like to advise?
I've selected two stocks which have come out with very good numbers in Q3, and I'm expecting again good set of numbers in Q4. Besides this, both have given a decent return of 30 to 50% in last 3 months, which is in spite of whatever the weakness was there in small cap, mid cap pack. My first pick is Make Money Organics Limited. This is stock quoting at 29. I'm expecting a price target of 40 rupees in the stock. And if you see the business model of the company is into manufacturing of pigments and pesticides. Company has recently done expansion of around 100 crore where they are going to make caustic potash flash, and this alone can generate a revenue of 125 crore and a profit before tax of 20 crore plus. Besides this, there's a shutdown in chemical industry in China. So instead of China exporting chemicals, they are importing now whatever chemicals they used to produce. So this is a company which exports almost 65% of the chemicals. I am expecting that looking at the free cash flows from the company, they are going to reduce almost 200 crore worth of debt also in next 2 years. Also look at last quarter performance where their sales grew up from 300 to 311 crores, but at the same time EBITDA improved from 41 crore to 71 crores. So I'm expecting again in Q4 company is going to come out with EBITDA almost 90 crores, because this quarter was bumper for chemical companies. So this year I'm overall expecting EPS of around 5 rupees from this company. So this is one of the cheapest chemical stock which is available at almost 6 price earning multiple only. So this is the reason why I've selected this by pick number 1 with a price target of 40 in 6 months.
And your second stock idea?
Yeah, my second stock idea is SL Propack Limited. This is again leader in packaging industry. In last 3 months, the stock has given best return in the packaging sector because the stock has moved up by almost 30%. Company has sold some non-core assets and reduced the debt also, because this was the reason their last 2 quarter numbers were excellent. Now again the trigger are that because of the monsoon, good monsoon expected, there will be a quantum jump in demand from FMCG companies. So this is going to be a big trigger for packaging companies. This is the reason stock is touching 50-week high. At the same time, their European and Chinese businesses are also showing a lot of traction. So this is the reason of selecting SL Propec as a proxy play to FMCG sector in my portfolio pick. I'm expecting a price target of 240 in next 6 months.
Okay, that's the word on the fundamentals. Manas, what about you? Which are the stocks that you like on the technical charts, and what would you like to advise our viewers?
My first pick is Arcom, where stocks made a strong base near to 50 rupees in last 2 months. It was facing resistance near to 55, but finally yesterday it broke that resistance with higher volumes. It is trading above 50-day moving average, so possibly we may see further up move. It can test 61 rupees, so one can buy it with a stop loss of 55. Second one is a buy call on CESC, where stock is continuously making higher tops and higher bottoms from the level of 420. And I think 2-3 days back, stock broke its 200-day moving average yesterday. It breached the resistance of 530 with higher volumes. So possibly we may see further up move. It can test 555. So one can buy it with a stop loss of 524.
Okay, gentlemen, let you go on that note. Thanks very much for your advice and sharing your top calls. We wrap it up on this leg of the show. Thanks for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.